Back to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Wednesday, the 18th of March. Looking at dollar yen, which is continuing to run alongside this uptrend channel that we've had over the past week and a half, and it's conforming to the trend channel fairly well, actually. I mean, it had this. It's been chopping around actually in the past few days, but reacted fairly positively to initial selling pressure again this morning. But it does have the problem that overhead is this resistance around 108 big figure, which incidentally is the 61.8% fib level. It seems as though in the last few sessions that's become the sort of basis of resistance, 108 big figure. So 61.8% fib of the big sell-off is 108 big figure as well. So that's important. So it's clearly a level that the market is looking out for. But you look at the momentum indicators. That bull cross on the MACD lines is interesting because that's obviously positive. But you've got this RSI, which is again just hovering around the 50 mark instead of just bursting through it. MACD lines are decent, but stochastics as well, just sort of beginning to tail off perhaps. And obviously we've seen in the past few sessions this sort of succession of consecutive positive and negative candles. So it's interesting that gold is just starting to just slip a little bit in terms of momentum on the hourly chart as well. You've seen this strong uptrend, and that uptrend is actually better defined on the hourly chart than it is on the daily chart. But you can see that uptrend that comes in around the 106.50 area at the moment. So it's perfectly holding well, but the momentum indicator is not really sort of pushing on. 65 on RSI at the recent peak and just sort of tailing off around the 50 mark now. So there is this sense that we're still positively biased in this dollar yen move, but is it sort of starting to hit the buffers a little bit is my question, because it seems to be in the last few days we're starting to form arguably even lower highs, actually 108.50, 108 107.90, and then again 107 just a shade underneath 107.90, and again 107.70 today. So actually you are starting to form these little lower highs, although on the hourly chart it's just not necessarily as defined as that. But certainly these are situations that we need to keep an eye on, and the fact is that the market is not really sort of pushing on. Although there is this uptrend in place, we still need to sort of break out above 108.50, which again is an old level. If I zoom out here, you can see 108.50 was an old resistance level, 8.55. So it's just it needs to push on once more to regain some of that upside impetus in that trend channel rally, but just sort of stuttering a little bit, but we still maintain the positive bias, and buying into weakness continues to be the way to play dollar yen at the moment. And with that in mind, it certainly looks okay still. So yeah, it's all looking okay. So I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.